Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
That's excellent. We are recording here on Saturday morning, March 14th. It's Pi Day, which is appropriate because we have big cycles coming in next week. We've got
Mhm.
the Vernal Equinox, we've got a Rebel Yell cycle. We've got some other timings coming in next week. So are the markets going to be and have they been taking care of their spring cleaning a little early, Barry? Do we have some resolutions in various markets? I know, I've got a bunch of commodities to talk to today. I talk about
Mhm.
today because those things are moving. So what's the story with the indices?
Well, we definitely cleaned up the sideways, looks like.
Yeah.
Possibly we're in a bigger one, if you take the low in November
Hmm.
to account, if we connect the low in November, like if we follow this trend line and to the high in January, well, we're still kind of in it, but the focus was all this build up above 68.20. That was been the talk for the last couple of months. As you guys know, we did call this high,
Yeah. Yeah.
and as it came in, but what happens, by the time we get through 3 4 weeks out of there, we forget the high came in. This is why I always talk about don't forget the high till gets taken out because you tend to lose the thread. So one of the points is that's the whole point of sticking with the charts and mocking up the charts and remember, so it'll help you remember what happened because it's always linked to something in the past. So last week we talked about we had two levels, right? Week before we talked about the 67.27. We're working with the S&P cash here. There we go. And last week we talked about the 67.27 and 68.20, right? The idea was if we slip below that, we're going to get weaker. We're probably going to go up and test this 66.38, 66.31 level. And 68.20 was going to be resistance. And I talked about this big shelf that we have built above it now. And that's going to be a little bit tough to get through, right? And if we get through 67.27, then it kind of opens up to go check out the 50% level and a little bit below. So, it's really between 61, 66.01. And you guys go back and look, I don't know, for 6 months, this level has been here since we used it last time. The big support area is here, and Friday, of course, we go right into it, and stop. What are we doing here? Well, from last week, everything kind of worked out. Of course, Monday we tapped the 66.38 level. We got a bounce out of it, ripped all the way to 68.20. Of course, we went above it a little bit, reversed immediately, and you can see Wednesday we were below that. We had a reversal on Tuesday. Ben and I were talking about that, saying, look, Tuesday we have a daily reversal in place, just a 1 day counter trend, pretty weak, and this is the kind of price action you get following that, right? We had 2 days pretty decent, 2 days down, wide range. I mean, look at just Friday's price action. We went from 66.38 to 67.27, so pretty big price action. So looking at next week, what do we have to deal with? Well, let's go back and look. We have we had the lows from November. That's really the big deal, right? We had the lows from November. So right around this 3/8 level, 65.50, of course, um, is where we have the next level of support. We slip through 66.38. So I'm sure everybody else has it on their charts because if you just draw a flat line from these lows, back in October, back in November, we're right in there. If you actually take the November low, comes in right about 65, let's say 65.25. So that's the area we're looking at. And if we get there, and I noticed we were about 45 days down, if that's correct. Not days, 45 degrees down. So Ben, look, we're about 45 degrees down from the high. We're getting into that 45 to 49 range, and we have to start looking for. I mean, if we would have hurried up, we would have had a better move. But the fact that we messed around for all this time and then, got a 4-day move, what to do? But it's been that long, right? It's been 45 degrees of movement just to get to Friday. 45 to 49 is the window we normally watch. And that's what Gann talked about. So let's watch it because we're in a place where we can come into some kind of support and reverse. You guys heard that here first, right? And where would that area be? I think the ideal would be a false break here to the November lows. That would be preferred, just like we got the false break in November against the lows in October. You can see it's not something unusual, right? Something that happens often. That would be it.
And
That would be, yeah, go ahead, Ben.
I was going to say, in cycle wise, it puts us right in the vernal equinox time frame, the next rebel yell, that miracle on ice
Yeah,
hockey
yeah.
cycle. I mean, it's all right in there.
Seasonalities there. So everything kind of lines up. The thing is, the seasonality and all of these other things are great. They sort of serve as a backdrop. And when you have a good count going into it, that's fairly solid, right? And this count is
Exactly.
not just the count, but we did exactly, I mean, it's squaring out because we did exactly one half a square down. So we do have a square coming in here. All right. So all that means is when we see that happening, so we were looking for a break, we got the break. Now we're at support area. We have two possible targets, right? This 638 to 601 area. And we had the November lows, right? So 65, 25. Those are the areas we're watching. Let's see. If we get there, I would expect to revert some kind of a reversal because of all the cycles we have coming in, all bunched up next week, and then one late one, right? So anyway, that's the expectation. You want to add anything to that, Ben?
Said when you have a count coming into the cycles, it really important to pay attention to the price action.
Absolutely. Absolutely.
And think about sentiment too right now with the war in the Middle East and everything. Could sentiment get any more negative?
Yeah. Yeah. Exactly.
Yeah, let's
So
see.
there you go, guys. That's that. Let's take a look at this is E-mini. The ES based on the continuation chart. This is the high that squared out. We had a couple of highs come in here. So from there, we did take out the zones, and as we started taking the zones out, we started going lower. Base is the continuation. We have a potential for false break around 65. What is it? 65.26. Let's say, yeah. This figure below the November low and the 50% level on this square turns out to be 64.65. That looks a little bit of a stretch, but anyway, that's where the big support, structural support falls. Other than that, we have the same area as the November lows to watch for. Okay, so that's what we're doing there. The Dow, again, this 47,162. We took that out. That was support. So now we're a little bit weaker, running below. Again, the focus is going to be the November lows. If we get right in there, we have pretty good structural support there for the Dow. You can see this triangle before we broke that. The triangle that broke to the upside, you can see the top of that became support here in October, and it became support here in November. And I can't imagine why not find support here again if we're going to visit that area exactly when all these cycles are coming together.
It's
All right.
interesting too. If you look at that chart, the Dow uh, is a much cleaner pattern.
Absolutely.
It didn't mess around like for months and months and months.
Yeah, yeah. Other than this little thing and the false break, everything else after the break, everything was fairly a lot cleaner than the S&P.
Sure.
And that's what gave us the indication, right? We started seeing the lower highs. So the break was fairly clear, coming in, especially after the false break couldn't hold above the old highs, mainly the 50% levels. And you can see on this bar, the February 12th bar, that was on the 50% level. After that, we really couldn't clear that. The rest of the price action was just straddling that, right? So anyway, let's keep an eye on the 46,000 level. I think that's the first area to watch. And then we're going to look at the November lows for support in the form of false break. All right. So that's the Dow. You guys have that. Now, obviously, if come Monday, we gap open above 47, 162, we know the counts and everything else hit early. And if the pullbacks can maintain above, let's say 46,900, I'm looking at like 1/16th of the square, then that low is in, we're going to run up for a little bit, right? And have a decent counter trend, maybe basis the weekly. So we'll take a look at the weekly in a second. Of course, you guys, keep in mind about support levels and cycles coming in. This is the really important part. When we talk about cycles coming in, markets coming into support areas, markets coming into structural support, and little windows where we can potentially have false breaks. The thing to remember is if we don't get a false break and we can't get above 66.38, that becomes a very dangerous situation, and we can just slip right on down into, well, it opens up the next level, which would be 62,082 in the S&P cash. But let's just take, one quarter at a time. So if that's the case, we get down to 64.60. And that scenario is if we lose the lows and we don't get this little scenario building up, which is a false break or some sort of a support level here and then a run back up. I mean, a preferred way is that, because that would account for the count and everything else will line up if we bounce here. And I've seen, times when we come into a place like this, we have all kinds of technical things lining up and the market just slices through. Well, that just brings in all kinds of weakness and the cycle just extends into the next larger one that's handling it. So we have to keep an eye out. That's just a given, right? Even in a 30-minute chart, we watch that. It's a little bit along the lines of when an ABCD target gets taken out, it has a tendency to run a lot further. So just keep that in mind with all of this. All right, moving on to the Nasdaq. So we've been talking, ever since we slipped below 25,140, we've been talking about, that being the key, and we have to, can't get above, then we're going to slip below. So as you guys can see, we really couldn't get above. And, without these squares, we would have no idea. I mean, if without the squares, I would have had the line up here and thinking, well, it should just slip. Why isn't it? But really the line was here, 25,140, a lot better accuracy. And now that sort of gave away, right? We let go of that level. The gravity is really toward this 23,700. And you can see, where I had marked this back in November, we didn't quite hit it. We stopped right above and got a bounce. And if we can get down there, I mean, that's kind of a big drop from where we are right now, because right now we're right about at a quarter of the square. If we slip that, we have 23,700. I mean, it'll be great because it'll be textbook kind of a move, and it'll come right into our cycles, but gives us still about 49 degrees, which puts us out to about Wednesday. And then you can say, give or take one day, maybe go to 50 degrees. It would still work, long as we're on price. So, and not only that, the reason for I think the zone I drew up here was because of all the structural support anybody can see back in August, back in July, August, right? And so this cluster here. So that would be the ideal place. A false break would be perfect. Keep an eye out if we slip into this area. Like I said, if we continue to slip through it, then we have bigger problems, and that would take us into the next square. Let's see what happens. I know you're going to be looking at the weekly chart for the Nasdaq, and maybe even the monthly.
Yep, we'll take a look at them.
Yeah, so that's going to be important. So stay tuned for that. Well, here's another view of the continuation chart. This is from the April lows. I've caught the highs perfectly and the move down. And look, 66.40 was sort of the level that we should hold above. And we that doesn't look like really holding above. We slipped off on Monday, and then Friday we're back visiting pretty much the same area. So, well, the reasonable stop will be up the structural support that I pointed out to. Otherwise, the 64.57 to 64.54 area becomes the next level by the book, right? Now, by the chart, I would say you got to watch the 65.29 area basis the April low. There's a couple, not the basis of the April low. This is based on the low in November, right? So we're still watching that. So if that gives out, then we have this quarter square level. So that's the area we're watching. The idea is we're coming. So the main idea is we're coming down into a cycle low potentially. So we're looking to see where price could hold that. Okay, that's the idea for next week. And
For point, Barry, too, we got to remind people that the cycles could be accelerations, right? There's reversal, there's acceleration, and then there's chop, that could come out of this.
absolutely, and that was the idea behind. I guess I didn't word it exactly like that, but that's exactly true. And that's what I meant by if we don't get a false break and the levels aren't holding, then the acceleration is really the market reaching out to the other end of the square, right? Now where the gravity is pulling it towards the 62,000 level. Not all
Sure.
at once and all in one day, but that'll be the path, right? We might come
Hmm.
back, go back up and retest this, fail again, and make people forget where we're going.
That's right. Absolutely.
I think you guys have a pretty good idea. Here's the March. Well, we're gonna probably we're rolling over next week, so
Yeah, we do roll Monday.
Monday. So, and I have I mean, I tracked the June contract, but I don't have it ready to go on this set. So we'll pick it up next week. But you guys have the cash and the other levels, which would still hold the same basis, the continuation charts. Okay, let's move on to the weekly charts. So here's the cash chart, and you can see, we just it's kind of a bummer, just when we got some movement, we're coming into seasonal lows and all kinds of other cycles coming in. Now you can see how on the weekly chart, the November low is perfectly lined up with the square. So that would be just, you can see how naturally that would be the place. And going a little lower, just tipping below and reversing would be the preferred scenario. Of course, if we slip through and get stuck below, that's preferred also. So it just depends which way it decides to go. Either way, we know the level to watch now. So you guys have that. Okay, that's it for next week. Here we have the weekly chart. We've been, I think we'll be watching this for a while now. All this stuff, the setup around the 7,000 level, it was all great. We started getting, then we had the 1 bar reversal right there. Then we have 2 weeks down. So we can have a third week low, low. Obviously next week, if we get a lower low and a lower high, that sets up the following week for a reversal. And if we do that, then we have the cycle is locked in. The cycle lows are locked in. Looks like that's what it should happen. The only other thing with the square business is, yeah, we could stop at a 2/3 or 1/3 here or quarter square, but the 66.35 is kind of important. So let's see how that works out. 66.35 to 66.40. Okay. This is a continuation weekly. So let's let a week get through, let the premium work out of the new contract. We get the prices perfectly. And this is kind of, I was keeping this chart, even though the highs didn't lock in exactly. I'm kind of watching this 65.20. So again, it all comes back to the November lows. Okay. We'll just keep it at that. Keep it simple. And here's the crazy chart from last week. Pretty good swing coming off of the lows. Early part of the week, we ran right up into the 68.42 and we reversed. 68.26 was the big level we were watching, where we post on X. For me, that was just a false break. We reversed, came back, lower high, below 68.26. And after that, it was all toast because we started making lower lows and lower highs. The next big place we were focusing was 67.52 first for support. And obviously, if it gives out, it was just going to get sort of weak. And that was the level we were focusing first part of the week. So we went out, you see what happened. We slipped through, came back, just couldn't get through it. And that was it. From there on, slip and slide. It was all down, and Friday really pressed lower. So we closed on the low tick. So what do we do on Monday? But we're definitely going to watch this 66.52. We had this 100-point range that we did like it was no problem. So the 66.52 is the key level to watch. We need to settle above that. And then we have the 66.66 level. the big job is here. If we're going to move higher or gap up or whatever, well, whatever the business we do, 66.52 is the key balance point. If we can get above that, as long as we're above that, then you watch for these levels to hold on any kind of a counter trend. If it's doing that, price pattern is going to build up and we can go higher in a rip or in some kind of a grind. Either way, that's the level we're going to watch. And if we slip through, then it really kind of opens up. I would really go back and look at the daily levels because that's where it's at, especially since we're switching to a new contract. I do have a June contract working here somewhere. So here's a June contract. You can see I don't have it all marked up, but the low we got last week, well, if that low goes, that opens up several other places, 65.70, 64.15, but I don't want to get into it. I haven't worked it up, as you can see. I'll work it up by Monday over the weekend. Last week was busy, as you can see. All right, so that's what I have. Lows focus on the daily stuff we talked about because that's the key. As far as firmness or the directionality, use the 66.52 as a balance point, just like we did 66.52 early part of the week, which worked out. And last week when we left off Friday, I think we talked about 66.52 also, right? Said if we can get above, blah blah blah, and if we can't, then we're probably gonna go lower, and we we did that in spades. All right. So anything you want to add to this, Ben? We're good, right?
Yeah, it's just it always fascinates me how this stuff comes to a head right in these cycle windows. And you know what I forgot to mention as well, FOMC's next week.
I was just gonna say
Yeah.
that. Yeah.
So throw that into the mix as well for your volatility
Yeah.
cocktail.
Yeah. And that would support, FOMC plus or minus a few days. We can always. It's a good high probability of some kind of a turn, right?
Yeah. Yep.
Might not be the turn for the year, but
Yeah, and a flush, right? We get
yeah,
flushes around then too.
exactly. So
They
there you
they
guys. You guys are all set to go for
yep.
next week.
So
Now let's move on to bonds. Well, we were watching the 45-degree level, which was the 116.15, 116 and a half level I've been talking about. If you guys follow bonds and you've been following us, we talked about all of this. We had the move up, resistance up here at 119.16. We had a big old reversal, came back, couldn't really hold the level, 116 and a half, 116.15 level. And of course, if we can't hold it, we're going to reverse. We on the 10th, say we tried to get through it. On the 11th, we reversed, right? We took out the low the prior day and we were 3 days down. This is not a pretty picture now. And this is why FOMC might be important. We'll see what happens. But guys, this it looks like we're heading right into this 110, 111 area. So keep an eye out for that. Let's take a look at the weekly. Ben, what's funny is how fast I get through the other charts and I talk forever, it seems, on the indices. I just don't know why. It probably because of all the different charts.
yeah, you have interesting stuff too.
Plus, that's what we trade the most. I guess that's
Hmm.
all right. So bonds weekly, you can see this is what, we stopped exactly at our resistance level, came to exactly at our support level. You can see why we don't have a whole lot to say. We had two levels, 2 weeks, we hit both. Now the key is see 114. If we get weak beyond under that, obviously we have room to run. So watch this. Ever since we got below this level, the 119 and a half level, I've been bearish bonds, right? It's just a matter of when it's going to click over. So mainly because we've been below the level. So like I said, it opens up the lower side. We have the next big support is 107 on the basis of the weekly. So everything opens up to the downside. We'll work on that later, but for now we're off the thing. But we need to make sure this is not still range bound. So we need to sort of get if we can get stuck below 114. The daily levels are probably the best way to handle that. But we'll see. I don't, and you're probably wondering, do we have anything in between? No, I don't. You have to just wait to see how we go about it, getting into the 50% level. There's no I don't really want to use a quarter square or any other support here because we have structure to watch. So I hope you guys are doing that. Now we penetrated below this structure. The key is if we reverse here on Monday, Tuesday, Wednesday, somewhere in there with the market, then we want to watch to see if the 116 level is still resistance, right? Then that means we're still stuck here. All right, so that's bonds. That should hold us through. Let's get on with crude. Crude, big news all of a sudden, right, Ben? Before it was all nobody talked about it, and all of a sudden it's in the headlines.
And money's pouring into it.
And money's pouring into it. Fear is pouring into it, along with money. All right, what did we say last week? We said if 79.50 this zone holds, it's still strong and we can go higher. And what happened? After the big old spike, we came down. You can see we maintained the 79.50, 50% level we held above the zone and moved higher, pulled higher. So the numbers are working, the levels are working. If we hold above 91, fairly bullish. And I have to say, if we hold above 95, then we really open up the upside. Above 97, it's primed and ready to go. Figure it's like at the gate kind of a thing, running up into this 110 level. It really kind of freely moves up here. You can see I don't have a lot of levels here. And you can see the free movement that here's a good example of that. And this is why there's really not a whole lot between 97 and 110. All right. You guys know where the support levels are. Now you know where the potential targets are. That's it for crude. Let's go check out the peak. Kind of feel guilty putting so little time into crude, but what to do, right? Like, what else
What
can
you
you
said,
say?
there's not
It's going up.
enough. No,
Not much
yeah.
to say. Add to that.
Just give the levels and that's all you can do.
Yeah. I mean, I see why. It's because we don't talk about the news and this and that and what I think and what happens in the, the war or anything else. So when you just talk about the numbers, there's not a whole lot to say. All right, basis the weekly, the key level, the key level to watch would be 96, and if we're above that, obviously, basis the weekly, it makes a strong case, and the pull is towards the next level, which is around 127. Basis the weekly, okay. So let's see what we do in the upper part of the square. If we get under it, okay, fine. We can deal with that. But for now, that's a level to watch. And let's move on. If you guys have any questions on the stuff that we talk about, feel free to comment. And if you like any of the work we do, any part of the work we do, please remember to, like and subscribe and hit the alerts. It always helps. And I always forget to mention that. All right. Gold, pretty much working according to plan. We couldn't hold the 270 degrees up here at 52.96 level. And now, then we drop below. Looks like we're making lower lows, right? Triangulating lower lows. But the big level, all of this between the 52, 80, 86, 88, 56, 52, 88, and 49, 29, 4029 is the area. So there isn't a whole lot to talk about. We can look at the 5100 level, 5110 as a sort of a balance point, right? So now we're below that. Looks like we're heading towards 49.29, and that would be support. Remember, guys, all this time we've been talking about the consolidation because after we made the cycle high at this back in January, we had a correction, and now we're gonna establish some value up here somewhere, and long as it's above 49.29, gold's in a very strong position. Don't forget that. I mean, it's in a strong position. We have a long way. We have a lot of support to hold it in a strong position, but given the momentum and the angle of ascent, let's say it's 49.29 is a level to watch for now.
What we'll see on the weekly, Barry, it just looks like another high level consolidation.
Right.
That's forming for now. For now.
All right, let's take a look at silver, and I'll do all the metal weeklies at once. Here's silver. Okay, silver, we're still back in the same levels, the three levels we talk about. Got 72, 81, and 90, and you can see we're at pretty much at 81, 88.65 is where we closed. Above it, we're more bouncy. Below it, we're not so bouncy. We're sinky. So if we get below 81, look for it to gravitate lower. If we're above it, we're consolidating in a little bit more of a positive way. But the entire complex is consolidating after that big old run we had. along with copper, which is also consolidating and is holding really well above this 565. We kind of broke the straddle. We were straddling the 120-degree level over here at 588, 589. And now, so if 565 goes, metals are definitely having some kind of consolidation. So we have 541 to look forward to if we break through this. It wouldn't be a surprise because they are consolidating, right? So that's that. Let's take a look at the weeklies. First, we'll take a look at gold. Weekly gold, we are exactly at the 3/4 level, which is 5,015, 50.15. Obviously, if we hold above that, basis the weekly, it's a much stronger consolidation. But this is what I meant by earlier when we were looking at the daily. We do have room going all the way down to 4,800, 48.15. Still good support, still very bullish, still very clean. So after that kind of vertical run, it's very normal to have, even a 50% correction is bullish. So we're way up here in the clouds, and we're looking to see where it will hold. And I don't think we've have spent enough time. I don't think it's finished. So that's it for gold. Just watch the daily level for now. Weekly is a little bit too long to watch for this kind of a consolidation. All right, silver. We were above the main square level, which was 83, let's say $84, and we held there for a couple of weeks, and then last week, we straddled it and ended up lower. So 84 becomes the resistance for the weekly, and the next big support would be around 66 basis the weekly. Okay, but use the daily levels to figure out. You can kind of see where the balance moves. If it's going to move higher or lower, rotating around that 81. So watch that, and you can use the weekly for the longer term. Let's move on to copper. Copper, well, what happened, the big thing last week was we lost this 593, which is where we get that 589. It's all right up in here. And so market couldn't hold above it. We straddled for a couple of weeks prior to that. It came down to this 566 level, which we've held during this consolidation, right? So obviously if we lose 566, 535 becomes the next important and major level. And the 566 is just the quarter level on the square. So if we lose that, 535, and that would be a good textbook correction if we get down into here. If we hold above here, 566, obviously they're very bullish, kind of a consolidation. And so far it's been very bullish, right? It's not like, oh, we made a high and everybody's selling. It wasn't. It's a very controlled, well, I would say bullish looking consolidation. So that's it for copper. Let's move on to Bitcoin. See what happened last week. Well, before that, prior to that, we had the high here that hit one of our levels at 97,790. Then just to connect the dots, then we had this 92,080 that we should hold above. We couldn't hold above that. We dropped through that, slipped through the old lows we called out in November. And we know that, once one of these lows get taken out, then we slip a lot lower, which we did all the way down to 60,000, right? And so once we got here, the big deal was the 68,580. The idea was, we can't get above that. It's much weaker position, which opens up the way to complete the ABCD going down into 52,000, 54,000. And so our markers were 68,580. This has been on the board for a while, since January, right? So what happened last couple of weeks is, we started building this triangle. We broke to the upside. We came back, reversed hard, and we were able to hold above 68,580. So this is a good, decent example of holding above 580. You can see a clean break here on March 9th, and after that we managed to hold above. And at the same time, we broke the slope, the line I had put in since last year. So once that slope is broken, what I've told you guys was, once that's broken, then the hard move is probably done, right? The big push, because we got very close to that line here. This line was here before price got right next to it in January. So it's a very powerful line. and we bounced off of it here, right there on that high on the 4th, but it held a lower line, held a lower trend line. So now we're watching the lower trend line and the 68,580. If we can hold above that on any kind of a counter trend, obviously holding about 68,580 is a stronger signal than the lower trend line. But either way, looks like we're done with the sort of the waterfall character, waterfall phase. Unless we take out the lower trend line, right? And then it opens up the downside again. So, but long as we're above 68,580, things are more on the upside to go up and test. You know, we do have resistance. You can see how the old low back in April was exactly where resistance was when we went up and checked it on the 4th. So we do have resistance above. So we'll see. It might be more of a consolidation, but if it's above 68,580, it's obviously it's stronger. It's a better signal than if we're consolidating below that. If it's going to consolidate below that, that definitely opens up the downside. So watch that carefully. For now, it's on firm grounds, but it's definitely had a lot of overhead to work out. You know, a lot of overhead to work out. Not just the old high, but then we get into not the old high on the 4th of March, but we're talking about the lows back in November, right? Those are, this whole area becomes big old resistance. So it's taking a breather, and for now it's on firm ground. All right, moving on to the dollar. Well, look at that. Exactly. Look at these two numbers, Ben. You can't get better than that when you come into a close on Friday.
Fantastic.
Right? Well, we're pulling up into resistance now. We did it. You know, this is classic, right? We went down, false break, called that out, high or low, holding about the 50% level, called that out. And then we started forming the triangle, ascending triangle, which breaks to the upside. All this stuff we've been talking to you guys every week, step by step, and it's been working out perfectly. 99.50 was the level we were watching for resistance. We want to get above that. And Thursday, Friday, we did it. You can see how, you know, one whole point, just practically overnight. Once we cleared that, you see what happened, right? We would jump right to the next level. Now 101.07, 101 is really the next big resistance level. So now we're gonna, you know, let's see what happens here. It's funny, we come into these key levels, right? When cycles are coming in, FOMC is coming in, everybody's knocking on the door, and here we are visiting a 101. So
Always amazing when that happens.
Yeah. Yeah, it's amazing. And we're doing really well above the trend line, making a lot of air between the trend line and the pricing. So trend is good. Well, that's it. Lows are in, now we're moving. Remember when the dollar was done, Ben? About the 100th time. And we were looking for something. What's that?
It was just at the lows too, right?
Yeah,
What they needed to like get everybody on the wrong side, right?
Absolutely. Like clockwork. Now, one of the things we talked about earlier was, you know, potential false breaks coming up into this zone, but this pushed hard, man. It pushed hard right above these and it closed up there. So, you know, watch that because we're also coming to some resistance. So any kind of a consolidation pullback, we want to make sure if it holds about 99.50, it's in a much stronger position, right? You can continue to buy the dollar. And obviously, if we get above 101, that opens up all kinds of potential. But that's where we are, doing pretty good so far. And I'll cover the weeklies altogether, okay? And let me go to the euro. Finally, somebody's waking up. As soon as the high came in, but you know, just after when we get to the weekly, I'll show you guys. But as soon as this high came in, I saw that thing, you know, the false break. It was just written all over it. So we called that out, and we talked about getting short here. We got short here, and then we got the triangle, broke to the downside, and we lost the 50% level. You can see the same kind of a thing we were doing on the S&P. Remember, we were hugging to the 50% line, or the Nasdaq, right? And then finally let go. Now we're coming back into the level. Like, just isn't that amazing? Because the dollar is coming into resistance, right? We talked about that 101 area, and of course the euro is coming into support level. Now, what's interesting is not just the mirror because I'm not using the squares off the same highs and lows. So that's what's cool about this. Um, and we're coming into the same, right? So we have that support level to look forward to. Beyond that, if we start losing that and start to get below this 1496 level, then the next major square would be around 1348. Okay. The big reveal here was that the 50% held, and we tried all week to get above it. We couldn't. So that's when the whole slide started to happen. Let's move on to the weekly. It's a beautiful chart. Technically, oh my God, right? This is it's perfect. Everything was perfect. All this chaos, but it was perfect because every time it did something, we had something to catch it. And the main thing that we caught was this 95.50 line being there, and that was that flush final the final low before we reversed, right? We
Right.
reversed and then we sat on top of it for 3 weeks. Great, very positive feedback. And then we drilled right through and remember, we talked about this, if we get this, we're going to have to go through it hard because that's a big old zone, sticky zone. And we broke right through it and nice follow through. And well, game is on, right? So now basis the weekly, as long as we're above 98, as you can see, we're in pretty good shape. So enjoy the fun. You guys lived through the chop, and especially for the euro, have fun now because that's what we had to go through. And there was that high, just after we were gloating about calling this high, we got this false break. And after that, we had this lower high reversals, and that was it. From there on, it was just down, down, down. Weekly, I mean, it looks like we have some pretty good momentum here. The next, we have like 1414 is a 1/3 line, which it could respond to. And the next structural level is really 1257. This is basis the weekly. All right, so watch those levels, and but I think the waiting is over, and now price is cleaning up the charts. It's time to clean up. It's time to clean up.
Yeah,
On trading.
the spring cleaning is definitely happening in a lot of markets.
Yep, yep. And I think everybody was patient enough, and everything's looking good. And it's going to be very active rest of the month, and it's going to be super active, ridiculously active April. Stay tuned. Let me put it on to you. I know you got a lot of commodities to cover. What do you got? What are you covering today?
We're going to cover the grains. We're going to cover all the softs except for cocoa, but I will mention something to look at cocoa and crude oil. I'll give a quick peek on the monthly circle chart just to let people have an update on that.
Absolutely. Okay, let me put it back to you. Well, Ben, not just the November low, you have a potential equal move coming in.
Yeah, yeah.
Man, that would be perfect false break territory also.
Wouldn't it? I mean, I won't spend a lot of time
Beautiful.
on the daily because I think you covered it pretty well. The key thing here is you can see we've been, slowly rolling over, even though it's been a sideways pattern. We tested into that support and then we bounced back up, and now it looks like we're heading back down. And it would be just absolutely perfect if we could come through here, create the false break into the cycle period next week, and cement the lows in here. The key thing, and we've been saying it every day because we post a 60-minute chart every day, and sort of like for people that are day trading or short-term trading the NQs, this 25,000 level's the key. And you can see, we were battling here for weeks going back and forth, and then last 2 or 3 days of this week, we were completely under it and just sort of gave way. And again, there were these signals amongst the noise that we've been talking about for the past month. These 1 day counter trends is all we could do. One up day and then down again. One up day and then down again. And that's just a sign of weakness. So let's watch the price action this coming week as we head into these cycle windows and see, do we get an acceleration? Because yes, we could do this ABCD and then rally again. We could also remember one of the possibilities is an acceleration. We could be catching a fast third here, right, where we just slice right through it and head down to this 22,000 level.
And basis
So,
on the weekly, we are on a third. So
yep. Yeah. So we got to watch that. We got to be open to those possibilities. We also had the timing, right? We had the 90 high to high. We had 48 low to high, and obviously that created a reaction. So that the cycles helped us there as well. Let's jump over to the weekly. Give you a look at the weekly. And you can see why this area where we made a low this week is so important, right? It was previous lows from October, November, and also structural support from last summer. Those were the highs last summer. So if we lose this area, right, if we don't just do a false break and bounce, if we lose it, that's why I was saying 22,000 of the full square will be where we're looking.
Man, what a great place to stop for Friday with all these things coming up next week, right? Look at
Right.
that. Look at that
Yeah.
chart. Beautiful.
It's better than any like thriller movie like Cliffhanger from a movie or a series, right?
This is a cliffhanger. Look at that.
Yeah. Yeah, there you go. So the weekly tells you what you need to know, right? And you can see why this is so important because if we get stuck under here, right, all this is distribution and people get caught if we, lose it and then come back up and can't get above it.
Hmm.
And then 22,000 is the next spot. And there's good structural support there plus the 120 off of the COVID lows. That's where we have this anchored. So it's very fun to watch this thing play out. All right, let's quickly take a look at the monthly, and you can see why 24,000 is super important. That's Barry, that's 180 up from the .com lows.
Yeah, that's important. All right.
Really important spot.
Hmm.
Again, then we're going to watch how does it interact with 24,000. We see first time we got a bounce. Here we got a bounce as well last year when we tested it. Again, if we lose it and get stuck under it, then bigger things are happening to the downside. For now, we watch this level as a key spot. Any comments on the weekly, monthly? Yeah, like I said, you did a good job covering the daily, so we didn't spend a lot of time on that.
Well, weekly, monthly, I mean, they're all moving in it. We have some directionality. So now we have to see. I mean, we
Yeah,
can get several counter trends within a month. So let's see what happens. But I think the key thing to remember is now we're making lower lows and lower highs, and that defines the beginning of a trend. But we need a little bit more, movement to really confirm anything. Like, for example, taking out the November lows. So
yeah.
it's not
That
it's
that
not like it's not some kind of a free for all at this point. But
Not yet, but it could be setting up summertime, right? If we
yeah, absolutely. I mean, we're
on
taking one sort of one chunk at a time here, so I think that's fine. But when it gets to that level, we'll see it coming. So
All right, let's quickly take a look at the calendar, and that you can see why 25,000 is so important. This is set off of the 2022 lows, November, October
right,
2022,
right. Hmm.
and this is 450 up. So this is a really important level, and it's at that 25,000. And you can see the battle that's been occurring. And then, 3 or 4 days, last 3 or 4 days this week, we got stuck under and started losing it. So that's why that's important. I just wanted to show that chart. All right, let's go take a look at Bitcoin.
And that 25 534, or is it
Yeah,
23? I mean 23 534,
yeah,
important
that
on
would be
that chart.
next.
Hmm.
Yep. And that fits in the same thing when we looked at the other daily and that, 23.9 to 24,000 areas is going to be the support where we might get the false break flush there. We'll see. Let's quickly look at the Bitcoin daily because again, Barry covered it, and covered it well. Here you can see 73,561 is key. We've tested it a couple times and haven't been able to get on top. If we can get above and stay above and sit on it, then I'll feel a lot better about more upside here. But until we do, maybe they're just going to chop around down here for a little bit more before they finish up. Something tells me there's going to be some sort of false break here, but we'll see.
Hmm.
Price will tell us if we're sitting on top of 73,561.
Yeah, that's the
You know,
key.
yeah,
Mm.
that's the key. Then we're heading up. We're heading up on bigger picture. Here's your weekly, and you can see we're struggling in this death zone. Once we got through it, now we're trying. It's trying. 2 weeks in a row we've pushed up into it. So that's positive development is we're not getting stuck under this 70,000 level anymore, which we did for 2, 3 weeks. But we still got to push through. And the top of this is that, 74 we were just talking about. So that's your weekly look. Monthly, still work to do here, right? 74,532. We got to get above that on a monthly basis to prevent, the monthly pressure being down to 56, pushing down to 56. And as the daily comes around, you've seen this now if you've watched the show, over the years, how the price action flows through, starting on the daily and then it flows into the weekly and then the monthly comes around. So that's kind of what we're seeing. Bitcoin trying to bottom here. First, the daily's looking better, but the weekly, monthly got work to do. So that's fairly normal. Anything else you want to add here on the weekly or monthly?
No, we're good. We're clean.
All right, let's go to the commodities. Other than the metals, which we know had the fantastic run, late last year, early this year, they're all taking money. There's money coming into the grains. There's money coming into the sauce. Crude oil obviously is taking money. Nat gas, we were hopeful last week that something good was happening there, but it still looks like it's chopping around. So I won't cover nat gas today. But other than that, the money is definitely coming into commodities, and their price action is telling us inflation is going to be a problem, 6, 8 months from now. So from a macro perspective, for people that look at that sort of thing, inflation is definitely on the horizon. So let's look at wheat. Wheat, we made a little spike high here. That was like, I think that was Monday's price action. We made a sort of a spike high in there. Completed I think a little minor wave. It was 36 by 45 here on the daily. We did 36 by 45 and then we pulled back and now we're consolidating. But as you can see, the consolidation is happening. And Friday we closed above that previous swing high, which was the 607 area. And as long as we're above that, excuse me, we should continue to push, strongly and start attacking this half square again. It kind of reminds me if you look, it kind of reminds me, Barry, if you look at it of like when we were starting the march up in the metals, how they really wouldn't pull back much. They just kind of slow down and consolidate.
Right. Little
And
triangle type of patterns
yeah, and
earlier.
that's what you're kind of seeing here, right? We had a push, a little pullback, push, bigger push, a little pullback, bigger
Right.
push, a little pullback.
Hmm.
So the
Very
momentum's
bullish.
there.
Very bullish. Yeah.
Yeah, it looks the grains and wheat look really, really good. 641 is the next level we want to focus on the daily. Let's take a look at the weekly. We have another up bar, and we're challenging this sort of this trend line, this flat trend line that I put in. We didn't quite close above it, but we're pushing on it. That's the next level. We want to sort of get above this and then see the lows sit on top of it, clearing this area where we've had this, you know, months long, like a year and a half consolidation. But it's pushing up. We pushed up to 644, which is the 7/8 line here. Full square will be next up at 681. So everything's moving according to the bullish plan, with the bigger time frames as well. Let's take a look at the monthly. Big news here is we've pushed above this month, above the 595 level. As long as we get a close above that, we'll be setting ourselves up for, having a full monthly bar above that and clear this entire price action going back into early 2023. So that's the hope and the plan with wheat. Let's look at the next one, which is corn. Anything you want to add here on wheat, Barry?
Well, just the fact that you've been talking about it ever since the low came in, and
Right.
it's been working out perfectly, right? I mean, we got the low, we have the higher low, and now we have nice couple of months of follow through. So these are the things that you have to pick up on early on, and you got all of it. Now, of course, it's not going to be in the news till we get through that 775, 800 level, or as we get higher. But this is where the quietly things start to set up.
And that's how it works, right? You get
Yeah, yeah,
that
yeah.
you get that notoriety near the top. I always remember that when I was at the gym that one day and they put Coco up on CNBC and it was within hours of the peak. It was unbelievable. So
Right.
you're right. Wheat and the grains will do that right near the highs.
At some point, yeah.
Yep. And there's the daily on
Wow.
beans. Look at that beautiful move, right?
Mhm.
And remember we said last week, we said, oh, next level up will be 1216. Well, look at how we attacked that all week.
Yeah. Yep.
We got to close above it. Now we just want to clear here, and then it is going to be beans in the teens, right?
Yep.
That'll be the
Sure.
next push. Once we clear the 1216, we'll be pushing up to, 1306 at 50% of the square.
Well, I hope you guys have been following because we called this, you started covering it right before the breakout, right? Once down there.
Down in here, man, down in here.
And then also once it started consolidating above 1035,
Yep. That was the
before
that
the
was the
break came.
first big test, right?
Yep.
Right there.
Yep. Very nice.
And then you can see it's just going level to level, right? Pushing up, staying on top, pushing up, staying on top. And now we're doing the same thing at 1216. Let's take a look, bigger time frame. Let's look at the weekly. Look how nice that is.
Yeah.
And right, and this is the boring part, right? This is the part where nobody's
Hmm.
interested, and this is where we start looking for the signal in the noise, right? And that's the higher lows.
Yep.
And then we start getting higher highs. And then it really gets going. So 1283 is the next. That's the full square. When we get up there, we want to see, can we sit on top of this? If we do, it obviously opens up, higher prices on a weekly basis. Let's take a look at the monthly. Also a nice picture. This is the one where you learn this over time and you learn this from watching patterns, right? You see the breakout and then this is the shakeout, right? Comes back and tests the pattern, tests the breakout. We actually went back into the consolidation, but then boom, broke right out. 1275 is next on the board here, and that's the 50% of the square on a monthly basis. So it's not a lot to say as the pattern plays out, right? What you would hope to see, but it's just you watch when you get to the critical levels, you say, okay, can we capture this next level? Okay, then that opens up higher prices. Can we capture the next level? Okay, that opens up higher prices. So right now it's just kind of on autopilot.
Not a lot to
Any
say. You know what we need? We need some of the DJ tools, go cha-ching, put that sound in there. Open up the chart.
anything else you want to add on beans?
No, we're good. We're pulling away. We talked about the train leaving the station a couple of weeks ago and it's following through nicely. 1275, that's the key. Once we get through that, we're in the teens and you know what happens there. We go crazy.
Yeah.
So
Yep. It'll be in the news then. All right, let's check out corn. Let's check out the corn chart, one of our other favorite grains. And you can see how this is moving nicely as well. Look at this shakeout, Barry. Remember we had that spike up and look where this low came,
perfect. Perfect.
right? Tested
Holding
the full
above, that's a good example.
perfect example of holding above, testing the full square and testing this structural support, right? Get the reversal and it's back running. And that's the beauty, and Barry mentioned it in his segment. That's the beauty of these squares. If you didn't have the squares, how do you know that this is okay, right? Other than the structural support, how do you know that this is the right spot for it to stop? And this pullback was actually very bullish.
Yep.
So that's the daily. Let's take a look at the weekly. Here's your weekly, another up week, trying to stay on top of the 464. Here we're looking at, 500 corn weekly basis, testing those early 2025 highs. But it's just, it all starts off with higher lows, right? It's pretty simple.
Yep. Yep.
Let's go to the monthly. Again, not a lot to say when it's moving. We're just checking the levels, letting you know the levels. So monthly basis 463 is pretty important. We closed Friday above that. If we can get a monthly close above here and sit on top of there, you can see why this is pretty important. Going back in time. It's a pretty important spot. Anything you want to add on corn?
No, we're good. We added.
Yeah.
That's it. No,
All
no,
right,
we're
let's
good.
go.
We're good. Good coverage.
Yeah, let's go take a look at the softs that we've been talking about. First one we'll take a look at is cotton. And again, pretty boring, but bullishly boring, right? We're moving up, making a high, pulling back, making a higher low, capturing the full square. Right? You can see that this was just the fake out move before they really wanted to move it. And now we're pushing to try and take out the previous high, which would give us a higher high. Focus right now is going to be on this 68.26, which is 50% of the square. And you can see why that's been a pretty important spot. So that's going to be a big test when we get up there. We want to watch how it acts there. Obviously, if we can get on top and stay on top of that, then we're looking at cotton going to be in the 70s. Let's take a look at the weekly. We're going to have to do another link, which you're going to have to send me.
Yeah, no problem.
Okay, you can see on the weekly, we're at a really important spot here, right? 66.41 area,
Yep, yep.
that 50% of the square. If we can get
Hmm.
on top of that and sit on top of that, that's a big move because it cleans out all these prices that we had here below that half square. So 66.41 is the key on a weekly basis. That's the level we want to be watching for the weekly. Let's take a look at the monthly. You can see the monthly has a long way to go, right?
Yeah, yeah. Well,
I
it's
mean,
just
but
getting
look,
started, man.
yeah, this is the thing that we were dealing with for 2 years, this
Hmm.
sort of sideways drift. But now look, we're taking out this trend line from that high, and then we can really start moving here. 66.27 here. So you can see this 66 to 66 area, 66 to 66.50 is really important. And
Right.
we're testing it, and we're starting to test it now. So
Hmm.
keep your eyes on cotton. Let's go to a new one I wanted to talk about. So here's one we were talking about last week, but we didn't approach because we were waiting for it to develop a little more. And this week, lo and behold, we got a higher low and a higher high. So let's talk about sugar. The low came in on a 50% of the square, right? We pushed up, which was basically right into structural resistance, pulled back, got a higher low, and now a higher high. And this is how it starts on the daily. So what are the key levels to watch this week? 1432 on the downside, right? As long as we can stay above this 1432 area, because we had a reversal on Friday, then it's 1512. And obviously, if we can sit on top of 1512, then we're on top of this whole structure. So it's given the action we're seeing in cotton and coffee and cocoa, it's not surprising to me that we're seeing a bottom and then a reversal here in sugar. So let's watch sugar this week, see how it handles it. Obviously, we don't want to see it take out 1349. That would invalidate the whole thing and say, okay, the low's not in yet. But as long as the low stays in place and we can push higher, and especially taking out this 15 area, um, sugar looks promising. Let's take a look at the weekly. Look at that. Another long-term trend line, downtrend line being broken.
Just slowly, quietly.
Quietly, right? Yeah. Last 3 or 4 weeks, it hasn't gone down, hasn't gone up a lot. But now, remember, after this was three inside bars right after this big down bar. This week we took out that high. So we have an up bar at a pretty important spot. Also, you see three drives here, Barry. One, two, three.
Hmm. Yep, yep.
Right into a full square.
Set up nicely.
So watch 1488 weekly basis. That's the next level. That's a quarter of a square. If we can get on top of that, sit on top of that, then we're going to push up towards 16. Now, the monthly obviously will be the least developed because we're super early on the daily, but just to give you some perspective on what we're seeing. The other thing is this thing likes to do, 45s and 90s. If we did 45 going out from basically saying a high to high, puts us into mid 2027.
Nice.
So let's see. Anything you want to add here on sugar?
No, we're good. We're good.
Just a quiet,
Starting early on it
yeah,
early.
quiet little beginning, but that's how they start. And now price has to prove it. So that's sugar. Cocoa, I said I was gonna discuss but not show because we it's even further behind than sugar. But what we did on a daily, we did 315 by 315 at the low and reversed. So as long as cocoa makes some progress next week, we'll highlight it and we'll talk about it. But let's talk about one that we have mentioned before that we want to look at, and that's coffee. So what are we seeing in coffee? Well, we got this low. We got a push up. We got a pullback. Now we're seeing, do we get a higher low here in a reversal?
Mhm.
290, obviously 50% of the square is very important. As long as we can get the reversal in this coming week, take out that high, the low, which was a false break with this low, in coffee looks pretty good. Did 90 high to low?
Yeah, good timing.
Yep, good timing there. Here we did a high to low of 49, which is in that Gann kill zone. So you can see this thing likes 90s and 45s. So now this week we're watching, do we get a reversal up? And if so, can we take out this high here? If we do, we could catch that, theoretically catch a third here. One, two, third move. Let's take a look at the weekly. Again, it's early, so it's not going to be super developed, but let's take a look at it. You see, we did get a weekly reversal, a weekly high on this bar as well. We had the low.
Mhm.
Last week we had a high. This week we had a high. Did close near the bottom of the bar, which I don't like to see. That's not usually super, super bullish. But let's see how next week plays out. We've got two weeks up so far in coffee. Let's take a look at the monthly next. Again, super early here, but you can see I think you can see it on this. You see the false break there, Barry, where we made just
Yeah,
a
yeah,
slightly lower low.
yeah. I can see it. Definitely.
Yeah, so that's the look on the monthly. And you can see the low came in here, right near the previous highs. It's sloppy, but there's still structural support there. Anything you want to add on coffee?
No, we're good. Good coverage
Okay.
early on.
And lastly, we'll take a quick look let's take a look at our favorite circle chart, the monthly crude oil. Barry did a great job covering crude on the weekly and the daily, but let's take a look at this circle chart. So there's your big move that we were looking for. Now what, right? Well, here on 50% of the squares at 101.75. So if we can close monthly basis above that, there's much higher prices coming in crude. The other areas to watch, are 94, 86 and three quarters. But you can see sort of the power once that circle unleashes, it just goes. It's fitting we talk about the circle on the Pi Day, right? March
I was just
14th,
gonna say that. Yeah,
Pi Day.
very
But
nice.
yeah, that's how these things work. So monthly basis, watch that 101.75. The century mark for crude is important in more than one way. Barry showed, on his charts how important it was, and it's in the geometry of the circle and the square here as well. So that's it. The summation for commodities is money's coming in. The charts are progressing. Use the levels. If you're not involved with them, use the levels to, find spots where there's a good risk reward entry, because it does appear that, you know, we've had since the beginning of the Russia-Ukraine war, we've had sort of a bear market in commodities, where they were asleep, they were boring, they were correcting. It looks like this conflict and the action in the metals last year is bringing money back in for the next bull leg. So we want to trade it while they're hot and while the money's coming in. Anything else you want to mention about the commodities, Barry?
Not much. No, we covered everything really well. I think some of the things are on the way. Other things are starting to get ready. So follow us every week. We'll keep you up to date.
Yeah, we'll be on top of these because it's definitely part of the cycle, and we know that it's supportive of good runs in commodities. So that's why we're excited about it and glad to see the technicals always take precedent, right? You're aware of the cycles and you know them from the background sort of weather and the conditions that are available. Then price through the technical analysis has to validate that, and we're getting the validation now as all these commodities, start to wake up and get moving. So it's fun times. Rest up, everybody. Good job, Barry, on the show this week. As you said, things will be very active. We're coming into this major cycle window, so we want to be especially aware of any changes in character we see in the markets and take note that as the technical support it, the cycles are there to provide a good change in trend. So rest up, and we'll talk with everybody next week. Take care, everybody.
All right. Good job, Ben. We'll see you guys next week. Follow us on X and we'll have all the posts. I mean, we post every day, so you guys can keep up with all the things that are happening during the week. Thanks a lot.
Take care,
Bye-bye.
everybody. See
Bye-bye.
ya. Bye.